Hello everyone, this is Paris. Welcome to BudgetHolics. In today's video, we're going to talk about the upcoming Robinhood IPO on Thursday. For those of you who are completely unaware of what Robinhood is, it's a trading platform that has marketed itself as a redistributor of wealth in the financial markets. According to their mission statement, their goal is to provide small retail investors easy access to stocks and other investment vehicles. We're going to draw from Robinhood's S1 filing. When a company goes public, they have to file a document with the SEC indicating how much money they make, what products they're selling, how much they're selling, what kind of users they have, and so on. These documents are typically hundreds, even thousands of pages long, so I'll give you some key takeaways. You can find the full document down in the description. If you're interested in personal finance, investing, and wealth building, please hit the like and subscribe button if you're not already subscribed, as this helps me immensely with the YouTube algorithm. Without further ado, let's jump right into it. Companies go public to get access to more capital to fund and expand their businesses. There are two ways a company might go public. The first is by a direct listing, which is listing themselves on a stock exchange. This is what Coinbase did. You can have a look at my Coinbase stock overview using the link here and down in the description. The second way, and the most traditional way a company goes public, is via an IPO, i.e. an initial public offering. In this case, a company coordinates with an investment bank, and the investment bank actually is in charge of the listing. There's a third way, using a SPAC, for which I've also made a video, but this does not apply here. As I mentioned, the IPO is scheduled for the 29th of July, and Robinhood will be offering 35% of its shares through its IPO Access feature. This is a Robinhood feature which allows users to buy stocks before they begin trading on public exchanges. The company is planned to be listed on NASDAQ with ticker symbol HOOD. Let's look at some key numbers. Robinhood currently has 18 million cumulative funded accounts. They currently have 17.7 million monthly active users and around 81 billion assets under custody. More than 50% of Robinhood customers are first-time investors, and more than 80% of new users are either organic or referred by existing customers. Robinhood's net revenues exploded from 2019 to 2020, from $277 million in 2019 to almost $1 billion in 2020. Their expenses also increased from $384 million in 2019 to $945 million in 2020. However, although Robinhood recorded more than $106 million in losses in 2019, it had a $7.449 million profit in 2020. They've increased their revenue per user from $65.7 to $108.9 a year. But how does Robinhood make money by offering commission-free trades? We all know that businesses are not charitable institutions and their primary goal is profit. The general rule of thumb is that when you're not paying for a product, then you're the product. Let's take watching free TV at home, for example. When you're watching a TV show, you're not consuming the product and paying the price of watching an ad. In fact, you are the product and the TV station is selling you to advertisers. In other words, TV stations sell large pool of customers to advertisers for them to market their products. This even holds for subscription channels, which explains the occasional Starbucks cap that may appear in a medieval fantasy show. Robinhood makes 75% of their revenue from payment for order flows. When you place a trade on Robinhood, the platform doesn't execute the trade itself. Instead, it forwards this trade to another company called a market maker, which is usually a large hedge fund, and gets paid for doing so. The hedge fund pays companies such as Robinhood to trade orders through them because they can sell, for example, stocks at a higher price than what they're currently trading at, or they can devise strategies to oppose the moves of small retail investors. In essence, Robinhood is selling your trading data and hedge funds can profit from it. This is why Robinhood was so heavily criticized during the GameStop saga, for which I made a video that you can find using the link here and down in the description. Specifically, in Q1 of 2021, payment for order flow accounted for 81% of Robinhood's revenue. May I remind you that more than 50% of Robinhood users are first-time investors. This means that they know nothing about market manipulation or how the PFOF model works. When first-time investors are placing a market order, the hedge fund can charge them a higher price than what the stock is currently trading at without them even knowing. This is why the PFOF model has come under scrutiny, with the SEC reviewing the practice and an outright ban not being off the table. In fact, in December, Robinhood was fined $65 million to settle charges about misleading customers over payments from trading firms that were overcharging users to execute transactions. Although this practice is illegal, and Citadel was fined $22 million in 2017, most hedge funds view this as the cost of doing business. In other words, their profits far outweigh the fines they might have to pay. The remaining 25% of Robinhood's revenue comes from interest payments and the Gold subscription. According to their website, Robinhood Gold is a $5 a month subscription service offering customers a suite of powerful tools, data, and strategies to supercharge their Robinhood brokerage account. With Gold, users get access to 4 premium services, including bigger instant deposits, professional research from Morningstar, level 2 market data from NASDAQ, and access to investing on margin. Margin accounts is in essence loans that Robinhood gives to customers so that they can execute trades with money they don't already have. As with any loan, they charge an interest on those margin accounts. This brings us to the big question of the video and the reason most of you tuned in. Is Robinhood a buy? First of all, I should clarify I'm not a certified financial advisor, and this video is for education purposes only. When it comes to investing, you should always do your own research and never rely on the advice of some random guy on YouTube. If you need further help, seek the advice of a certified professional. As you might have guessed, I don't think Robinhood is a buy. Apart from the ethical concerns of gamifying investing, I'm not against the idea of small retail investors having access to as many tools as possible. However, 75% of their revenue comes from a practice that might be outlawed, although the chance of this happening is low. Moreover, they only have 2 years of data in their S1 filing. And finally, we should all take a lesson from Coinbase and realize that when it comes to the IPO of a hyped stock, the price might plummet in the first couple of months or weeks. That's why it's generally a good idea to wait a bit before investing in a stock. I'd love to hear your thoughts on Robinhood, whether you're using it and whether you think it's a buy or not. If you enjoyed this video, please hit the like button and subscribe if you're not already subscribed, as well as share it with anyone you think might find it useful. Until we meet again, don't stop investing. Cheers.